What is going on, guys? Welcome back to another video. Today I am going to be going through what I look for whilst I backtest, how I organize my data and my stats and whatnot, what I look at and how I go about it. In front of you is the big ass backtesting sheet. I'll go through it step by step. This is the whole thing right here. I get on TradingView, and if you guys are thinking about what apps to use for backtesting, I would highly suggest TradingView. It's very easy to use. I just made up this sheet based on my strategy. You can obviously change it the way you want to change it. You can see here we have the general tab to the left. We're looking at what market we're trading. We're looking at time. As you do this, you get to see, will I have actually be able to enter that, or will I have been asleep, been working or at university or whatever. You can see more of a true look at which trades you would have taken. We got the sessions here. For me, I don't think this makes a huge difference because I'm more of a swing trader, and you can see that with the results over here. I will do some more analysis on this, but the beauty of this is you can quickly start to see correlations. If you put in a chart, session versus win-loss ratio, and you see what's your best session, what's your worst session. You can even do that with times as well. Not an Excel freak, but I'm sure if you search up how to do that, it's quite easy. I'm learning a lot as I go as well here, but I think what you can grab out of this is invaluable. I got the direction, so buy or sell. This makes a big difference because buying and selling is different. Selling is different emotions playing on people, but that's just something you find in these backtesting sessions. This next column over here, probably the most important column in this whole thing. What this is a sort of system I've created for my strategy. Every time I enter a trade, I ask myself these questions. So if it's a yes, it's a 1. If it's a no, it's a 0. Is there wicks that are formed, as in wick rejections? Is there an engulfing candle on that entry? Is there a higher low, lower high structure formed? The next thing is, was there a double bottom or a double top? Whether we are at a key level or a key structure. A key level is just an area in the market where price is failing to break above or below multiple times, sort of like resistance or support zone. Key structures are higher highs and higher lows, lower lows and lower highs. I found that trying to find trades where it's both a key level and a key structure is great. It provides a lot higher win rate. These first two, this is just a requirement for my trading. I have to have wicks and I have to have engulfing candles, so it's always going to be a 1. Whereas these, I'm still trying to fine tune which ones will be better. Obviously, you can adapt this to things that you think might make your strategy better and you're not sure about it. This is the way to check. So once you're done, see whether there's a correlation between if I enter on double bottoms and double tops, is that better for my win rate? That's the entry confirmation section, which I think is very important. The next one is management. Very interesting set of statistics. I know this looks very, very confusing, but it is quite simple. 1% preset versus 1% trailing. The 1% means that I'm risking 1% of my account per trade. If we look at the results, 1% preset obviously is going to move a lot slower than the 2% preset. Well, what I'm trying to figure it out, if we have a drawdown, whether that 1% or the 2%. So you can see 1%, 2%. So I'm trying to figure out risking 1% per trade or 2% per trade is better. What this preset means is that no matter what, I go for a 1 to 3. I went for a 1 to 2 and a 1 to 4 once over here. And what this is spitting out is just a percentage as a decimal. If I lose 1R, which is 1%. The effect on this is going to be 0.99%. Whereas if I win over here, I get a 1 to 3, so I make 3%. Here I lose minus 1R, 1%. Here I took a 1 to 2, so I only make 2%. Here I took a 1 to 4, so I only make 4%. Whereas this 2%, you can see I'm risking 2% per trade. So 1R is going to equal 2%. So every time I lose, it goes to 0.98. or 98%. Every time I win a 1 to 3, 6%. You can see the 1 to 4, absolutely beautiful. Where is that 1 to 4? 8%. Okay, this trailing means that I'm trailing my stop. So I'm still trying to figure out whether trailing my stop or having that preset is better. That's what we're trying to do here. This max RR is an interesting figure point. It is the max price move away from my entry. If I were to let it run and I was able to exit at the perfect time, how much money would I have made? I know that seems a bit pointless, but it's very important to compare your max RR to what you actually ended up getting. What we can figure out with this max RR, say for instance, our preset over here, using that 1 to 3 risk to reward, say we hit a 1 to 3, our max RR was 4.5. We missed out on 1.5R. You can see here, we ended up getting break even, but price moved to hit 2.7R. We missed out on 2.7R. You can see here, hit break even, price went to hit 5R. 4R, 6.3R, 3R, 8R. Something I need to work on here. I'm not quite sure how I'm going to do this, whether I need to find some trailing strategy, which is really good. But you can see already I'm missing out on a lot of potential money over here using this preset or whatever. This trailing stop is using that trail, how I end up going. Again, I move my stop to break even once we hit 1-to-1. We'll explain that in just a second. With this trailing stop, again, it's interesting to compare which one is better. So if we go down here and we go equals sum of all of these, so we hit 22R on the preset, so that's using a 1 to 3 always regardless, whereas if we use the trailing stop we hit 20.98. okay, so you can see it's quite similar, but let's look at this max R equals sum. We would hit 69.45R. I mean, it's pretty crazy to look at that. Obviously this doesn't have the losses in it, which is a big factor, but there's obviously a major difference between what I'm actually getting versus what I would get if I had the perfect strategy or management technique. So that's just a very interesting thing. I'm not sure how I'm going to fix that. The next thing is results. This one over here is similar to these ones over here with the 0-1 sort of setup. Break even in brackets better option. So what that means is, say for instance, I would never, but we take a sell somewhere here. So price moves down, then we move our stop to break even, and then price stops us out, but then continues to hit our take profit. Most of the time, moving my stop to break even was a better option because once I moved it, it went on to hit my stop loss. Now, something I need to figure out, should I take some profit at break even? Because if we look down here, we had 9 wins, 8 losses, and 9 break even. If you do the math, you'll get to see whether taking some profit at break even is better or letting them run or whatever. Right here, we have drawdown. So what was my max drawdown? Hit 3 in a row, and win streak, we also hit 3 in a row. If I hit break even, it doesn't change anything. I'm still on a losing streak or a winning streak. Break even is break even. Last thing, my results. So over here, we can see in the end, the strategy is performing quite well. After 26 trades, we are up 43%, risking 2% on preset. So that's using 1 to 3 RR. I mean, that's a very good thing to know. Obviously, backtesting is going to be different from your real in-market trading because somehow you always manage to mess it up. You have emotions, you have things like this. So once you hit, you see your backtested result, don't expect to get that, although you should strive for it because realistically you can achieve that. Done it in the backtested market, you'll be able to do it in the markets live as long as you follow your rules. So that's the beauty of backtesting. You know you can make money, you just have to follow these rules. The last thing I want to talk about, how you can use this whilst you're live trading. Every time I enter a trade, I'm going to be asking myself these questions. Do we have wicks? Do we have engulfing candles? Do we have this? Do we have this? Do we have this? Do we have this? And then I can look at these and see, we're not trading at a key level. We're only trading at a key structure. So maybe I shouldn't be entering this. Okay, I think value you get out of backtesting is just insane. And it is honestly the only way you're going to become a successful trader. I'll zoom out a bit so you guys can maybe screenshot this if you want and make your own. I'll post it on my Instagram if I ever make a copy of this format, but remember it's going to be different for every person. If you look at analyze data over here, none of this really makes any sense to me. Show all 36 results. Wow, this is really interesting. Loss has noticeably lower. That's interesting. General month, March has noticeably higher results drawdown. And March is a bad month. I'm not sure if these are accurate. Wow, so I just hit analyze data. I've never even seen this. This is extremely interesting. Losses account for the majority of results drawdown. No shit. I'm sure you can do your own analysis on this. There's lots of YouTube videos out there. But I hope you guys enjoyed that. See you soon. Follow me on Instagram, Twitter, whatever. Have a good week.